Choosing a specific Medigap insurance company that is right for you with the generic information that is available online, it's virtually impossible. But enough is enough. At Giardini Medicare, as brokers, we help our clients narrow down dozens of insurance companies offering Medicare supplements down to one that they ultimately enroll with, and in this video, we will do the exact same for you by discussing specific insurance companies, both big and small by name, and we will discuss the important factors that you should look at when considering and comparing Medigap companies. This will include showing you the exact same tools that we use to find how Medigap companies open and close blocks of business, how they outsource their plan administration to third parties, and most importantly, we will show you how to find the often hidden actual historical premium increase data for each insurance company on the market. Lastly, we will discuss other factors like financial ratings and customer service, discussing whether or not they actually matter when it comes to choosing a Medigap plan. And ultimately, we will discuss if there truly is a so-called best Medigap insurance company. First, we need a quick disclaimer. Everything we talk about in this video is publicly available information, and we will show everyone exactly how to find examples of the information that we will talk about. Any insurance company that watches this video and gets upset should know we are just presenting the information that you, the consumer, are entitled to. And it is ultimately up to you to make your own conclusions. Now, although what we will discuss applies directly to our home state of Michigan, the methods in this video, they can be applied nationwide. But after several days and countless hours of just compiling this information for Michigan, we really had to stop somewhere.
I can't do it anymore.
This video is not geared towards choosing between the different Medigap plan letters like Plan N versus Plan G, since instead we will be focusing on choosing between the specific insurance companies that are offering Medigap plans. Because this is a more in-depth video than we usually make when it comes to Medigap coverage, make sure to watch our other videos like the ones you can see here on the screen before this one so you can get a good understanding of how Medigap plans work, as well as how premiums increase over time and how you may not always be able to change plans in the future, and many more topics. Again, this video is complex, but we believe in showing you the full details of what is happening behind the scenes so that you can decide what does or does not matter to you. Now, you may have heard or been told by insurance companies or brokers that finding the rate increase history for a Medigap plan is essentially impossible. But fortunately, that is simply not the case. When it comes to Medigap plans, they are regulated by the different states' Department of Insurance. So before an insurance company can start selling a Medigap plan in a state, they have to file their proposed plan premiums and plan structure with the state Department of Insurance, and it must be approved by the state before the product can be sold. This also applies to when they want to increase plan premiums in the future. Those rate increases also have to be filed and approved by the state ahead of time before being implemented. Luckily for you and for us, this means that we can access these public records for these filings to learn just about everything that we need to know about the behind the scenes of the premium increases among different insurance companies that are offering these Medigap plans. Now, although we have this information available to us, it can still be very difficult to navigate this system properly to find what you are looking for, and even if you do find it, it can be really hard to interpret the data that we are going to show you. So please don't forget to reach out to us or another trusted independent broker to help you decipher this data at no cost to you. And as a quick reminder, the online filing system that we will show you has nothing to do with Medicare Advantage plans, so please don't expect to find anything relating to them in this video. Now we will walk through some real world examples, but if you have any extra questions, make sure to comment them below this video. First, the website that we will be using can be found by going to serff.com, and we just call it serff.com. But this stands for the System for Electronic Rates and Forms Filing, as you can see here. Then on the main page, you can scroll down to the box that says Resources, and you will want to click where it says Serff Filing Access. Don't worry, if you need this direct link, we will post it below in the description of this video. Next, you will see the main Serff Filing Access website, which shows the states where this system is currently available. Unfortunately, there are a few states like Florida that have different online filing searches that we will also link to below in the description. Since we will be focusing on our home state of Michigan for the examples in this video, just remember that these same methods will apply to the other states that are shown in blue when you're using this online CERF filing system. So now we can click on our state of Michigan, and then we can click the specific link to the Michigan Filing Access link, which is provided, and then finally we can click Begin Search and Accept. Next, you will see the filing search screen. We will keep things simple here, and you can change the business type to life and health, and then narrow down the plan type by typing in Medicare, and then selecting all of those results. This will essentially limit the results to Medicare supplement related information instead of the many different insurance options. At this point, you can hit the search button to see the results for all of the filings related to Medicare supplement plans. But unfortunately, this likely won't help because as you can see, there are close to 500 pages of results. So to actually make this make sense, we can go back to the search screen and we can actually type in a specific insurance company's name to search for filings that relate to that specific insurance company. So for our example, we will use Aetna since they are a pretty popular Medicare supplement company. Once we see the results, it normally helps to sort by the filing type. Many of these filings will be advertisements, which I really wouldn't recommend worrying too much about. Instead, most of the valuable information will be found in the filing type listed as rates. Using our Aetna example, we will choose the 2024 filing rates and click on that. Once you do this, you will see many documents relating to Aetna's 2024 filing with the state of Michigan. One important document where we get much of the information in this video is from the actuarial memo, which you can see a link to right here. Sometimes it will be called something slightly different, but you're usually looking for the word memo. Right away, when reading the actuarial memo, it tells us that this plan was created in 2017 and it is currently closed, meaning that this is a specific block of business from Aetna that is no longer being sold or marketed to new enrollees. If you need a refresher on what it means when a Medigap company opens and closes blocks of business, please make sure to watch this video right here since it is very important to understand. Now, if we go back to the initial search results, we can even find the withdrawal letter from Aetna that they filed with the state announcing they were closing this plan to new enrollments in September of 2019. Going back though to the actuarial memo, we can also find the proposed premium rate increase that Aetna filed with the State Department of Insurance. Now, in this case for 2024, they are proposing a 12% increase for both Plan F and Plan G premiums and a 0% increase for Plan N. Now, there are many more things that can be learned from this document, but this is enough for the sake of this video. However, if we do go back to other documents, aside from just the actuarial memo, we can find other very valuable pieces of information, like in this case where we can see the rate increase history for this Aetna plan over time. Documents like this can provide priceless information for learning more about the different insurance companies that are offering Medigap plans. Now, the reason using this online system can be so difficult for consumers, or really just anyone with less experience, is because you might think searching Aetna like we did will provide you with what you need to know about the current plans that they offer. And why wouldn't you think that? But in reality, if you look at Medicare.gov, at least here in Michigan, Aetna is currently selling Medigap plans under the name Continental Life. So to find the actual filings related to the current Medigap offering in our state, we have to instead search the filing that contains the name Continental Life for the company name in the online filing system, and this will actually provide us with the results we are looking for. We could talk about this for hours.
No, we don't have time for that.
But as much fun as that sounds, instead just know that one final cool trick that can be done when searching these filings is sorting the results based on the date range, so we can find proposed rate increases far sooner than they are formally announced by the insurance companies to you, the general public. For example, if we search in the last couple of months, we can see that Americo is proposing a 19% increase to their Plan F, Plan G, and Plan N. But this is not projected to take place until July of 2024. Just know when using this method, you will want to check the filing status to see if it is still under review. If it is, the proposed premium changes, they are not final yet, so just know that they may change. Okay, so now that we showed you how we found all of the information for this video and how you can do the same thing, let's actually break down the overall Medicare supplement landscape using the information to find out if there really are insurance companies that you should consider over others, and how you can use the information contained in the state filings to help you when it comes time to choosing a specific Medigap plan from a specific insurance carrier. Just know that we cannot guarantee the accuracy of all of this information, but it is essentially the best we have. So while we are presenting some of our findings, just know that, like always, you will want to do your own research and, of course, form your own opinions. Whether you're getting help from a broker or looking at Medigap options on Medicare.gov, one thing that will immediately become clear is that there are many different insurance companies offering Medigap plans in each market, and it is nearly impossible to understand which one might be the best based simply on the pricing and information you see online, especially because we have discussed in other videos that choosing the cheapest plan available may not be right when it comes to what you will pay long-term for your Medigap premiums. In fact, in our local Medigap market, there are dozens of insurance companies offering Medigap plans, but we generally can classify these insurance companies into a few different categories to make things a little bit easier for the sake of this video. Just know that these are just how we choose to classify them, and it is not a true official system set by Medicare or by anyone else. Because we are not actuaries and we do not design these plans, all of the information is based on what we could find and decipher to the best of our abilities, but of course if there are any discrepancies, please comment them below and we will do our best to correct them. Also, after discussing each of these categories, we will look at their average premium increases and we will discuss the different factors that we think you should consider when choosing a Medigap company, so make sure to stick around to the end. Lastly, please keep in mind that the premium increases we will be showing you, they do not include the age-related premium increases that come with these attained age policies. Because age increases vary from one company to another, it was just too much to include in this video. So the first category of insurance companies that we will discuss, they are often lesser known insurance companies that you will see offering Medigap plans in your area. These are generally going to be life insurance companies, and when we run a current quote in our zip code, you will find companies like ACE, Federal Life, Woodman Life, American Home Life, Nassau Life, American Benefit Life, and many more. Oftentimes, these companies, they are financially backed by large parent companies that provide these Medigap plans with strong financial ratings. Some current examples of these include ACE, which is backed by Chubb, and Ellipse, which is backed by Swiss Re. Generally, these companies, they offer these plans because Medigap plans, they are standardized with the same basic benefits. It really takes essentially no thought to create a new Medigap plan for the market, since you really don't have to design specific coverage details. Instead, they just have to price it, market it, and then they provide a financial backing to pay the claims of the members that choose to enroll in the plan. So this can be a good way for insurance companies to enter the Medigap market with virtually little risk, so they can grow their overall client base. Another aspect that really helps companies release these plans is the fact that they are able to outsource all or a majority of the work to consulting firms and third-party administrators, which we will call TPAs. These companies, they can handle premium rate filings, premium increases, claims processing, and even customer service for the insurance company. You can see here, based on filings submitted to the state, that many companies use consulting firms like Telos Actuarial, which was formerly CSG Consulting, also Allen Bailey and Associates, and even other large Medigap companies like Mutual of Omaha. These consulting firms help insurance companies looking to enter the Medigap space to come up with plan pricing, development, and premium increases in the future when the time comes. On the other hand, a third-party administrator or TPA, they can help with even more services like medical underwriting, applications and enrollments, premium billing, customer service, and much more. A very common example of a TPA is called Insurance Administrative Solutions, or IAS. You can see here on their website a list of the services that they offer to promote to insurance companies that are looking to offer Medigap plans. So, although on Medicare.gov you will see the insurance company's name and their address, in reality most of the back end for these plans can be handled by a TPA like IAS. You can even see here that IAS tries to emulate the customer service of the company, so when you call, although you may be talking to an IAS representative, you likely won't even realize that you're not talking to the insurance company that you signed up with. They also provide online websites and portals examples for these insurance companies to use for agents and plan members. Now, this becomes pretty clear when we look at the different online client logins for companies like Central States Indemnity and US Fire, and we realize that they are virtually identical and they are clearly provided by the same company, which in this case is IAS. Now, this also becomes clear when looking at the applications and policy examples for some of these insurance companies, since they look similar and the address listed for their administrative offices is in Clearwater, Florida, where IAS operates. Now, I want to be very clear. We are not trying to pick on IAS and say this is bad or wrong. We are simply showing you the reality of what many people don't talk about when it comes to Medigap plans. IAS is far from the only TPA that does this, as Secure Administrative Solutions, or SAS, is another example of a TPA similar to IAS.
Sounds exactly the same to me.
I know, it's kind of confusing. Based on our research, SAS seems to act as the TPA for companies like National Guardian Life, WellCare, Atlantic Coast Life, and Pan American Life, as you can see by their identical websites and their similar applications. And we can also see here an example of a form they have filed with the state authorizing them to represent National Guardian Life. Some of the large insurance companies like Aetna and Mutual of Omaha also administer plans for some companies in the Medigap market. For example, Woodman Life, Federal Life, and GPM, they seem to outsource their administration to Mutual of Omaha, as you can see by their applications being virtually identical to Mutual of Omaha's and listing addresses connecting them to Omaha, Nebraska, and to Mutual of Omaha. Then we have companies like American Benefit Life, Aflac, and American Home Life, which seemingly outsource services to Aetna, as you can see by their applications being identical to Aetna's own Medicare Supplement plans. Also including the essentially identical login websites for American Benefit Life and American Home Life. Most of the time, the currently available Medigap companies that we put in this category have little history in the market. So brokers and other people, they will tell you that we don't have data to better understand how these plans might perform in the future when it comes to premium increases. And although that is true that we don't have much history for specific companies that we just mentioned, instead what we do have are the trends and the premium increase history of previous companies that outsource their services to these TPAs. So first, let's look at other similar plans that were outsourced to IAS in the recent past. These include companies such as Lumico, Prosperity, and Central States Indemnity. Now, if we take a look at a company like Lumico, you can clearly see it is the same company that is currently offering the Ellipse Medicare Supplement as seen on Medicare.gov. Now, the Lumico Medicare Supplement, they first entered the market in 2018, but then they closed their original block of business to new enrollments just 3 years later in 2021, as you can see from this letter they filed with the state of Michigan. Now, instead of stopping their Medigap offerings altogether, they just made a new block of business, now instead highlighting the Ellipse name instead of Lumico, although virtually nothing changed on the back end for this plan. The current Ellipse plan has had relatively stable increases over the past couple of years, but what if we look at the Lumico product with the closed book of business instead? Here you can see the rate increases for the plan and how drastically they increased after closing. Again, if you want to better understand how opening and closing books of business impacts Medigap premiums, please make sure to watch our video that you can see on the screen. In addition to this example with Lumico and Ellipse, you can see here other timelines for other IAS administered plans and how long they were open blocks of business, as well as when they closed. Just know that on the graph, the timelines with the same color, they show different blocks of business from the same parent company. This includes companies like Americo and Great Southern Life as an example. Now, in addition to that, here is a graph that shows the premium increases for these different blocks of business over time. Make sure to pause it here if necessary. But of course, like we said, this is not unique to companies using IAS as their TPA. Here you can see a similar trend of the yearly premium increases lining up with the opening and closing of blocks of business for a company like Liberty Bankers Life and their different entities with these shaded rectangles showing the blocks of business when they were open, and then the line on the graph showing their premium increases. Here we have also compiled the timelines of the opening and closing of blocks of business for other insurance companies that outsource to a TPA that is not IAS. In addition to this timeline, here you can see the average rate increases over time when combining Plan F, Plan G, and Plan N. Just like before, the companies shown with the same color represent different blocks of business from the same parent company. Now at this point, you may be thinking, well, what about the large national insurance companies that have long established history in the Medigap space? I'm glad you asked, because we're going to talk about that right now. These companies, they make up the second category of Medigap companies, which we will call the Big Five. These companies, they are well known in the health insurance market, and they have a large percentage of Medigap enrollments. These include Cigna, Aetna, Mutual of Omaha, Humana, and the largest of them all, United Healthcare, sponsored by AARP. Although Humana does tend to lack Medigap enrollment numbers compared to the others on this list, we still included them since they are a large player in the Medicare Advantage and the overall health insurance industry. Unlike the Medigap companies we previously mentioned, generally these larger companies, they don't outsource their plan administration to a third-party administrator, and instead they tend to handle it in-house. But does this make them a better option for your Medigap coverage? Well, let's start by looking at Cigna as an example for this category of larger national companies. Currently in Michigan, they are offering coverage as the Cigna National Health Insurance Company, as you can see on Medicare.gov. Over the last couple years, this plan has remained competitive with reasonable premium increases for Plan N and Plan G, as you can see here. But has this always been the case? Well, just like these smaller companies we mentioned before, these large insurance companies, they're not immune from closing and opening a book of business. In fact, the current Cigna National block of business was created recently in mid-2021. Before this, as you can see, Cigna had a previous block of business called Cigna Health and Life that was opened in 2016 and closed in 2021, and before that there was a Cigna entity called Loyal American from 2010 to 2016. Remember, all of these companies, they are branded and operated by Cigna, so as a consumer, you likely won't even be able to tell that they are changing, but you can see a timeline of these blocks of business here on the screen, and more importantly, you can see the history of rate increases with these plans throughout the recent years. Cigna will be interesting to keep track of going forward, since due to selling their Medicare business to a Blue Cross Blue Shield parent company, they recently filed to shift their Cigna Health and Life block of business to another Cigna affiliate called Medco. Also, as we have seen from the Cigna National increase filing in Michigan for 2024, their low Plan G and Plan N increases won't be continuing at least for this year, as they are projecting an 8.9% increase for Plan G and a 9.9% increase for Plan N. Again, we are not picking on Cigna. Here on the screen, you can see a timeline for the opening and closing of different blocks of business for Mutual of Omaha, Humana, and Aetna, as well as their corresponding rate increases of these blocks of business. So you can see Cigna is not the only one that operates this way. But what about United Healthcare? Well, they actually tend to keep blocks of business open for many years, and as far as we can tell, they've really only had 2 different blocks of business in the last decade or so. But does this mean they are the obvious choice and they are immune from higher premium increases? Well, the answer is unfortunately no. Here on the screen, you can see their increases over the last decade or so with their older closed block of business versus their newer block of business that remains open. Now, even without closing their block of business, they still experienced a premium increase of about 12.5% this year in 2024, as you can see from their state filing in Michigan. Okay, so at this point, you have seen how both smaller Medigap companies and the largest Medigap companies operate really somewhat similarly when it comes to opening and closing blocks of business, as well as their overall premium increase trends. So now this brings us to category number 3, which are the companies that aren't necessarily the largest, but they still generally self-administer their plans in-house without a TPA. For the sake of keeping things simple, we will call these the mid-sized companies. These include companies like Bankers Fidelity, Manhattan Life, Wellaby, which was formerly Medico, Guaranteed Trust Life, and more. Now, you may not have heard of these companies, but each of them generally has many years of experience providing insurance in what they would consider the senior market, as well as offering Medigap plans for many years. Like always, we don't have time to break down each one, but we will use Manhattan Life as our in-depth example. Currently, they are offering a plan by the name of Manhattan Life and Annuity, and based on the fact that I said currently, I think you know where this is heading. This current block of business was opened in 2020, and here you can see their recent rate increase history that is associated associated with it. But if we look back in time, you can see from 2018 to 2020, they were offering plans by the name of Western United Life Assurance, and before that, from 2014 to 2018, they were offering plans by their company name of Manhattan Life Insurance Company. You can see here on the screen the rate increases associated with these different plans, and more importantly, how they correspond with the timelines for when they opened and closed blocks of business to new enrollments. Like always, we are not just cherry picking data and targeting specific companies, so to be fair to Manhattan Life, here you can see the timelines of the opening and closing of different blocks of business for the other insurance companies that we place in this so-called mid-sized category. Again, on the timeline, blocks of business from the same company will be shown using the same color. Also, more importantly, we have the rate increase history that is associated with these different blocks of business that you can see on the graph here on the screen. This is a good point to again remind you that a company having a block of business open for many years does not always make them the obvious choice. For example, on the timeline, you can see that United American has not closed their block of business in several years, and as far as we can tell, this is the same block of business that started in the 90s. Now, although they are an excellent choice in some areas of the country, here in Michigan, for example, you can see when doing a quote for a 65-year-old, they are priced much higher compared to other companies, making them a much less viable option. Also, despite premium stability over recent years, their 2024 increases were higher than their historical averages, as you can see from their rate increase filing. So maybe after all this discussion, you want to instead take a look at insurance companies a little bit closer to home. This brings us to category number 4, which we will call local Medigap companies. Now, the term local can mean insurance companies that only sell within a state or a specific region of the country, but since we are sticking to Michigan for our examples, we have 4 companies that we will put in this category, which include Blue Cross Blue Shield of Michigan, Priority Health, Health Alliance Plans, which is known as HAP, and McLaren Health Plans. Also, although there are many Blue Cross Blue Shield companies nationwide, generally they do operate independently of one another, so we consider Blue Cross Blue Shield of Michigan as its own local entity in Michigan. When looking at the addresses listed on the plan documents for these local carriers, you can see they generally administer their Medigap plans in-house without outsourcing to a TPA. Although they may still get help with some filings from consulting firms when it comes to premium filings and rate increase adjustments. But what does this mean when it comes to their overall operations and rate increase history? Well, when looking at the 4 plans, we could not find an example of one of these companies closing a block of business to open a new one in the last several years. And you can see here on the screen a timeline of their current blocks of business. We of course also had to take a look at their average yearly premium increases, and it does appear that they have had lower rate increase percentages on average compared to the other categories of insurance companies that we just talked about. Now, of course, we have to point out that although this overall trend is positive for these local carriers, you can see that their recent premium increase histories on the graph have been trending a bit higher than in the past and are closer to the national trends with the other insurance companies. And this is also a smaller sample size with local carriers, so you have to take that with a grain of salt. Also, as we mentioned earlier in this video, these premium increases that we're showing you, they don't include the yearly increases for the different insurance companies with an attained age policy. These age increases with the local insurance companies, they do tend to be a larger percentage compared to the national carriers, and they tend to occur sooner with age increases starting at age 66 with our local companies compared to larger companies like Aetna and Mutual of Omaha, whose age increases generally begin at age 68, like you can see here on the screen, using examples from our Medigap quoting software that we use as brokers. But these local insurance companies, they still remain something to consider, and you can apply this to your Medigap search by seeing if there are unique companies offering Medigap plans where you live. Okay, this has been a lot of data and information up to this point, probably even too much, but as you know, I really just can't help myself.
My head is spinning.
So let's tie things together and look at an overview of our different Medigap categories. We will do this by looking at their average yearly premium increases, but now we will compare 5 different categories of companies. These will include number 1, companies administered by IAS. Number 2, companies that are also outsourced to TPAs, however other than IAS. Number 3, the largest national companies. Number 4, mid-sized companies that will typically handle their plans in-house. And finally, number 5, the local insurance companies. Here you can see the average overall premium increase history, excluding age increases, for the different Medigap insurance companies in each of our categories, and we broke it down showing the differences between Plan F, Plan G, and Plan N. Now, although we would love to say that this is a grand revelation finally showing which category is best, in reality, like we said, these sample sizes are far too small to draw any definitive conclusions, and they should be taken with a grain of salt. Instead, what it really shows us is that overall premium increases, they're pretty similar between the different categories, despite often operating very differently from one another. Generally, time is the great equalizer when it comes to Medigap plans. Regardless of the insurance company, over time, all Medigap plans will increase, and you should budget and mentally prepare for this. It is not uncommon to see Medigap plans double or even triple in price after enough time passes. Also, just so you know, this year in 2024, we have seen larger Medigap premium increases nationwide with virtually all insurance companies compared to the averages we have seen in the past several years. Many of you that are watching this video, you may have already been hit by double-digit increases, so just know that you are not alone. Let's wrap things up by going back to our initial question of, is there actually a best Medigap insurance company? Now, the answer to this is yes, there definitely is. However, after sifting through hours and hours of countless data, the only thing we know for sure is that we have no idea which one it is. And in our opinion, neither does anyone else. We do the absolute best we can with the data we are given, but this still does not tell us what the future holds for these different Medigap plans. Trust us, we wish there was an obvious best Medigap company, since our job would be a heck of a lot easier and this video would be much shorter. But we don't want you to leave empty-handed. So we will finish by talking about what you can look for when it comes to choosing a Medigap company that will hopefully be right for you for years to come. First, do not forget to look at the pricing of the actual Medigap plans available in your market. Don't start learning about and fixating on different insurance companies only to realize that that company doesn't even offer a competitive plan in your market. Instead, reach out to a broker or go to Medicare.gov to get a quote for the Medigap plans available in your zip code, and then start narrowing down options from there. Now, to narrow down your options, here are some categories you may want to consider. First, there is the financial rating for a plan. Generally, insurance companies receive a rating from AM Best, which is an indication of their overall financial strength. Typically, we recommend sticking to companies with an A- or better rating, since good financials, they really can't hurt. But it's really not close to the most important factor to us. We even tracked the average premium increases, and with our small sample size, there did not seem to be a large difference between the plans with different financial ratings as far as their increases go. Lastly, just know if you lose your Medigap plan due to your company actually going bankrupt, you do get access to guaranteed issue rights to find a new Medigap plan, although this is extremely uncommon. Next, we have customer service. So we understand customer service is important, but we really don't think that this should make or break your decision when choosing a Medigap company. In reality, many of the companies, they outsource customer service to the same sources, and even the large companies that handle this in-house, they will still likely use large call centers where the quality is very hit or miss. Instead of relying on the insurance company and their customer service, this is where we as brokers come in. Our services cost you nothing, and when issues arise with your Medigap company, which they will, we will be here to help you resolve issues whenever possible. The next factor we look at is enrollment size for a Medigap company. By this, we mean the number of people enrolled in a Medigap plan with a specific company. Although this is not foolproof, in our opinion, having a large number of plan enrollees, it really helps to spread the risk of large medical claims to hopefully help with longer-term premium stability. This can vary greatly among different companies, with, for example, 47,000 people enrolled in United Healthcare Plan G in Michigan versus 4 people enrolled with the Plan G with National Guardian Life. So when it comes to finding the so-called best Medigap plan, it's probably not surprising, but we think the most important factor is the rate increase history of a Medigap company, which is also likely related to their tendency of opening and closing blocks of business. Make sure to consider the unique age increases for each company as well, and have a broker help you find the average premium increases for you for any company that you consider. Although there are many brand new Medigap companies popping up all the time, don't forget, just like we showed today, they are likely connected to other companies from the past, and there is plenty you can learn from just digging a little bit deeper.